Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar, and these are the top stories that we're tracking at 1:30 p.m. Markets make a good recovery from the day's low after a weak start in light of the overnight sell-off in U.S. equities. Metals realty decline, while energy and FMCG stocks gain in trade. Hindustan Construction surges after completing its debt resolution plan. The company will reduce debt on books to 3,575 crore rupees and will also save 400 crore in annual interest payments. Stocks gain on positive management commentary. KPIT Tech tells CNBC-TV18 that the recent acquisition of Technica will at least add 10% incremental revenues in FY24, while Route Mobile Management ups their guidance. They're saying we're confident of a 50% revenue growth this year, but it may inch even towards a 60% revenue growth. Quick Heal Tech is buzzing in trade after they detailed their 150 crore rupee buyback plan. This is the company's third buyback in the last 4 years. Will begin on the 4th of October. Mahindra Logistics is buzzing in trade after the company announces plans to buy Rivalgo's Express B2B business, while SBI Cards posts a strong showing in August. The company performs better than peers, although the credit card data sees a dip in spends. Well, a quick check on the markets. As we begin Midcap Radar, there has been a very strong recovery. The Nifty intraday low was about 16,950. So from that level, there has been a recovery of more than 150 points as we speak. The Nifty is above 17,100. The benchmark indices are up close to about 0.5%. Midcaps are moving in step. The advanced decline ratios once again turn in favor of the gaining side. We've got nearly 3 stocks in the green for 2 in the red. And big boy, Reliance Industries, that's contributing to that intraday recovery. Reliance Industries share price will also come up for you on your screen. The sectors which are lagging, one is the banking space. The Nifty Bank is just up close to about 0.1%, so relatively underperforming the benchmark indices. And apart from that, auto stocks are seeing some profit booking after the phenomenal run that they had in the last 3 months. And plus, there are these global linkages for the likes of Tata Motors, Motherson Sumi, etc. And commodity names like Hindalco, Tata Steel are also a bit under pressure. But let's talk about the market technicals and find out where we are headed and how you should approach this volatility that we're seeing. Dharmesh Shah of ICICI Securities now joins in for a technical check on the markets. Dharmesh, afternoon. What have you made of this recovery that we've seen in the last 2 hours? What does it tell you, and how do you position for trade now?
Yeah, good afternoon, Reema. Definitely, I think so the recovery has been very sharp from the major support area of 16,900, which was again a 200-day moving average, which was around 880. And we believe, I think so, this market has already seen a correction of 5% from the top of 18,000 levels, and we are obviously the 5% cut. They see the market seems to be highly oversold in nature. We expect a technical pullback to head towards 17,400 to 500. This is again the major resistance for the Nifty. So overall outlook remains to be positive. We believe the major rally which happened from 15,300 to 18,000. This correction is nothing but the retracement of this major rally, and where we see a market should not see a breakdown below 16,700 to 800. So any dip from the current level should be looked as a buying opportunity for the short-term target of around 17,500. But overall, I think so that structurally we are still positive, and what we see is nothing a correction of a large part of a rally. So buy on dip should be the strategy. Keeping a stop loss of 16,700 remains to be the strong support for the Nifty.
Okay, for the second day in a row, at least the 200-day moving average, which is 16,990, 992, has held for the markets yesterday and today. We dipped below the 200-day moving average, but we managed to find support and climb above those levels. Dharmesh, any stock recommendations? Because you are expecting this pullback to last to and take us to 17,500.
Yes, we expect, I think so, the market leader, Reliance Industries, should see a recovery from the current levels. The stock has seen a good correction, and a major support of 2360 has been held even in today's current trading session. If you look at the today's low, it is around 2360. We expect, I think so, the stock to see a 10% upside. So almost 2560 to 2600 is likely target for Reliance from the current levels. So any dip in Reliance towards 2390 to 2400 should be looked as a buying opportunity for an upside target of around 2580 to 2600. Apart from Reliance, we expect again the banking space, which has seen a good outperformance in last few trading sessions. And what we see is a correction after a sharp rally. We expect even for the bank Nifty, I think so, the one where stocks like State Bank of India or In the privates, again, Axis Bank, HDFC Limited, HDFC Bank and Bajaj Finance should do good from the current level. So overall, banking consumption also will remain to be positive for Asian Paint, Titan, other stocks which have been relatively outperforming even in this current fall. So we believe this stock should see the relative outperformance going forward. So consumption, IT again a oversold territory, so technical pullback cannot be ruled out for IT also. So in and all, except metals, I think so the one which seems to be quite vulnerable even at the current levels, most of the sectors should see a contribution from the current levels.
Dharmesh, thank you very much for joining in. Let's now get to our Midcap Movers segment. Vivek joins us. He's on the big ball and he's going to take us through the midcaps that are moving in trade. Vivek?
Well, absolutely. Finally, after quite a few sessions of deep red, today we are finally seeing a bit of a bounce back. In fact, in the morning, it did look as though, the markets could correct very steeply and we could be in for a terrible Tuesday. But the sharp intraday recovery has led to quite a bit of buoyancy as far as the broader end of the markets are concerned. First on our list is HFCL. Now, this particular stock on the back of an order win has perked up quite significantly in trade. The other one is EKT India, erstwhile Sona Systems. This automobile stock is automobile component maker is actually doing quite well in the session on very strong volumes. Last couple of trading sessions, we told you about how some of the diagnostic companies were buzzing. Today, it's the turn of Aster DM. This stock has gained on good volumes, up over 6.5% in the session. Last on our list is two companies with exposure as far as the eastern market in India is concerned. Both Star Cement as well as Nuvoco, are perked up in trade on the back of the fact that we understand that brokerages have sent out notes to their clients saying that the price hikes that have been taken east have held up quite well. And they also believe that, come October, you could see further price hikes, especially in the eastern part of India. On the other hand, when you're talking about the losers, have a look at Tube Investments. IIFL has cut their rating on the stock to add, and which is why we are seeing quite a bit of a negative downtick. We are also seeing Chemfab Alkalis, the stock on high volumes today is seeing quite a bit of a sell-off. Varun Beverages, last couple of trading sessions has seen quite a bit of a sharp fall, down close to 10% in just the last two trading sessions. Canfin Homes down 30% in the last 8 trading sessions. Clearly, the resignation of the CEO has not been taken well by the street.
Vivek, thank you very much for that list. Get into a break. Up next, we'll be joined by Harshvardhan Dole of IIFL to discuss the overall outlook on the oil and gas.